A lot of people expected interest rates to be down this week, especially since the US just bombed Iran, but that hasn't happened. So here's what's going on and what it means for mortgage rates. Normally, when global conflict breaks out, investors move into safe havens like US bonds that can generally push interest rates lower, but we didn't see that happen this time. Investors don't believe this will turn into a full-scale conflict. Now, there was a chance that oil prices could spike if they targeted energy or they shut down shipping lanes, but that didn't happen either. And without that kind of disruption, there's no real inflation pressure. And a big jump in oil is bad for mortgage rates. It will send inflation higher, which will lead to higher interest rates. And last week, the Federal Reserve had their meeting and they decided to not cut interest rates. So when inflation's still a concern, the job market is a concern, so we're just in this weird waiting period until the next Fed meeting. And there are two things that could affect interest rates in the near future. One is being the jobs report. So if we get a weak jobs report, whether it's low job creation or high unemployment, that could definitely affect interest rates, moving interest rates lower. And on the global conflict side, depending on what happens, that could push interest rates higher, that could push things lower. So I guess we'll just have to wait and see how this whole Iran thing plays out and what it does to interest rates. And if you are wanting to buy a house, don't wait for one of these major economic events to happen that forces you to either buy or sit on the sidelines. Buy whenever you're financially ready and you find a house that you like.